Hi everyone, welcome back. This lesson will be about advanced market structure and how to use it to help inform your trades. Here's an overview of the lesson. We'll first introduce market structure, what it is, how it is formed. We'll talk about identifying market structure breaks, shifts in the market structure to help better inform changes in the market and the overall market environment. How to trade off of market structure breaks, and various considerations on market structure breaks as well. So here are some terms to know before we dive into the material. Very frequently, we'll use shorthand abbreviations such as MS will stand for market structure, HL, higher low, HH, higher high, LH, lower high, LL will be lower low, MSB for market structure break, HTF, a higher time frame, and LTF, a lower time frame. Higher time frame representing daily, weekly, monthly, and lower time frame representing maybe the hourly, the 30-minute, 15-minute, 1 minute, 5 minute, etc. We'll dive more into each of these topics and concepts as they arrive in the lesson. So what is market structure? Market structure is a sequence or a series of highs and lows in a financial instrument. A bullish market structure is equivalent to higher highs, higher lows. The market is trending upwards. The market is overall moving upwards. And in a bearish market structure, we see lower highs and lower lows. Overall, the market is moving downwards. The market is falling in terms of valuation. Now, in terms of identifying market structure, we want to select highs and lows in the given asset, the given market, as market structure anchors. And this will talk about where to start with that. The first concept we want to talk about is the swing low. So this is a low with a higher low on both sides, and a swing high. This is a high with a lower high on both sides. So imagine the market overall is moving upwards, and then we have a certain candle that might just stick out above the others on either side of it, and it's just right here. And generally that is our high with a lower high on both sides, and the swing low acting as the low with a higher low on both sides. We'll take a look at a visual example of that in a second. Now, within market structure anchors, starting points for identifying the market structure, there is no set formula or method for identifying market structure anchors. It's subjective. It may vary from trader to trader, maybe from different assets. Different asset classes may consider different anchors differently. Maybe different styles of traders may view market structure anchors differently. But the main idea of understanding, hey, this is a significant low point or a significant high point in the market is the first step in identifying the market structure, and if there is a shift in that structure or some sort of continuation in the direction. Some considerations. We want to think about the recency of where that market structure anchor was established. How recent ago was it? Was it maybe a couple days ago, weeks, months, years, or maybe even decades? We also want to think about the significance or the size of the move before that swing higher, swing low, and after that higher low. The greater the swing, the more drastically lower it is than everything else, or more drastically higher it is compared to the other candles or other times, recent time structures. It is considered a better higher low and a more significant market structure anchor. Now, within that, the reality is you really want to look for the most obvious high or low. What sticks out? If it doesn't clearly stick out from first glance, it likely isn't the best structure. It isn't the best example. Let's take a look at a visual example of this. So on the left side, here's our swing high. And let's say we had some sort of upwards market movement. We're coming from below, prices moving up. We see some sort of high established, and then on the next candle, price comes back down. So here we observe that here is a high with a lower high on both sides, and it's noticeable. This particular candle is noticeably higher than the candles before it. So we can classify this as a swing high. Now, obviously, this is taken out of context. Context typically is king, but for a basic example, here's our swing high. On the other side of this equation is the swing low. Let's imagine we're coming from some sort of higher point. Price is coming down. We reach an extreme low observed here. And then on the next candle, we move upwards. So here is a low with a higher low on both sides. So this is a sticking point, a point where the market is sticking out. And here is our extreme low, our swing low in this situation, with a higher low on both sides. So essentially, price comes down and swings back up. In this case, price comes up and swings back down. Now, to put this into context on a price chart, so here's Bitcoin on the daily. Here's just an example. This is from 2021 into about June 2021. So typically about Q1, Q2, 2021. Overall, Bitcoin had a great year, a great performance, great 2 quarters in a row, back to back, drastically producing higher highs and reaching new all-time highs of about 64,000. And here we see several instances of swing highs and swing lows. Particularly observed early January, we see a high of about 40,000, give or take, and a swing high established here. This candle right here is noticeably higher than the rest, and then overall we see a downtrend resulting from this swing high. So we see market comes up, produces a swing high, comes back down. We see another swing high established here at around 55, maybe 58,000. Another noticeable swing high. This green candle is about $100, give or take, higher than the wick of this red candle. Now, this one could be a little bit more subjective. Maybe someone might say, oh, it's not clear enough. But I think in looking at the broader trend of the market, this could be considered a swing high. Once again, it's subjective. We also see another swing high on this red candle. This red wick acted as a peak. Market came up, produced a swing high, came back down. Now, on the other hand, we see several instances of swing lows. We saw a swing low produced pretty much late February, early March, observed here when Bitcoin came from this high of about 57,000, 58, came back down to 44 and swung back around to the upside. We see another swing low observed here from this high coming back down. Price comes down, established a low, and reversed back to the upside to this swing low, to this swing high. One more time, we see another one in late April, going into early May, a swing low of about 45,000. Price does recover, come back up, and fails to breach this $60,000 range. Now, what's interesting here is that we do see in January, late January going into early February, there was a market reversal, overall shift from this short-term downtrend from the high established of about 40,000 in early January. Price did come down. I did not label a swing low here because it was not necessarily extremely obvious compared to the other examples. If I did want to place a label for a swing low, I probably would place it here on the 21st when Bitcoin came to a low of about 29,000, give or take, or maybe around here. But generally, this greater structure could be seen as a swing low. There isn't necessarily one particular moment that I would say sticks out compared to the other examples that I have highlighted. And this is where it becomes subjective and varies from trader to trader. You might decide that, hey, I want to label this as a swing low. Other people might decide they don't want to. So here are some considerations. Is the swing low or high you're analyzing part of another key level? Or is it a part of some sort of greater support or resistance level? Maybe candle opens, maybe some sort of Fibonacci level, maybe moving averages. Is it a part of some other system that you can find a correlation or find significance within? Market structure breaks alone are not worth trading. You'll find structures that qualify as a break in that market, but it may not be the reversal you are looking for. So that means looking for every single swing high or swing low may not be the best idea. You may not always find the best entry point or the best exit point just with swing highs and swing lows by itself. This is where using a combination of ideas and concepts, indicators, and other technical analysis to essentially bring all these ideas together comes into play. This is just one tool to use in your arsenal. Now, focusing on those swing points whose break will be easily visible and significant to the greater market will be beneficial over the long term. You want to look for those swing highs, swing lows that are easily visible. You don't want to force label things. Now, if you're unsure, turn to support or resistance. Mainly horizontal levels of support and resistance. Horizontal support and resistance is formed from previous highs or previous lows. If you can identify key support and resistance levels, you can use that to identify meaningful market structure levels. And this is applicable to trend lines given the sequence of higher lows and higher highs, or higher lows or lower highs, I should say. Other things to consider. There is no single market structure per time frame. This can be subjective and it really depends on what you're looking for. Remember, all the time frames essentially are analyzing one single asset, but just looking at it through different lenses. For more input and more insight on market structure, and particularly on time frames, be sure to check out our time frame lesson. Now, the assessment of market structures will depend on how you shape your criteria for valid swing points and the types of trades you want to take. One person could pinpoint every single swing low or swing high on a chart, while another could be much more selective in their drawings. This is where the subjectivity comes into play, and really what are you basing these swing highs and swing lows off of? Now, when you might take one person that draws every single one in, and you might take another person that uses support and resistance to help inform what's a valid or what's a more important swing high or swing low in context of what else is going on in the market. Now, one thing I will give as a piece of advice is to not chase every breakdown, breakout, or reversal, right? Just because price came back up and produced a swing high doesn't mean all of a sudden we're going to see some sort of reversal to the downside and price is just going to immediately fall through a cliff. And the same thing on going downwards and to the upside. Just because price produced a lower low or some sort of swing low that was really obvious and started to come back upwards doesn't mean that it's necessarily going to continue moving upwards and that it's a valid reversal or breakout to the upside. Sometimes price goes lower to go higher, and sometimes price goes higher to go even lower. Right. And I'm sure you've seen that. If you haven't seen it, that's something you will see commonly in trading, where you think, oh, price formed a high and then it came down. Sometimes price needs to come back down to a level of support and consolidate before buying power or bullish pressure can basically recharge and establish a new higher high or a new level of support to increase to push for new higher prices. Same thing with bearish pressure to the downside, selling pressure. Sometimes price comes down, right, from a really high point, price comes down and maybe it comes up to here. just because it came higher doesn't necessarily mean it's going to continue. There might be a chance for bearish pressure to reconsolidate and selling pressure to consolidate and then force price to go back downwards more. Now, sometimes a market structure break can be a weak sign of a reversal where the overall trend is stronger and has not ended. And this is where it is important to use a number of factors. We might want to look at what's going on in the greater market, look for macro indications. If you're trading crypto, what is Bitcoin doing? That's typically the biggest question. What's Bitcoin doing? What are the market movers doing? What's Bitcoin doing? What's Ethereum doing? If you're trading Bitcoin, maybe you want to look at what the S&P is doing, the S&P 500. Maybe you want to look at what gold's doing. Taking a look at other considerations in the greater financial space and using that to help fuel your own analysis and your own idea of what the market structure could be indicating to you.